Hey guys, Jared Wesley here of Live Traders, and it is that time of the week. It is lecture time, and this week's topic, guys, is about flexible biases, whatever you want to call it. All right, there's that old mantra out there, trade with the trend is your friend, blah, 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 blah. Well, it's actually true. Give or take 70% of stocks actually move with the market. In fact, I think it's higher than that. They say that, but I think it's closer to 80 to 90% of stocks follow the market. Well, today we're going to talk a little bit about understanding two things. Understanding what the market is going to do, because there are some days where it's very easy to gain a bias in the market. Oh, it's clearly long, it's clearly short, etc. But there are other days where the market's very choppy and you're not sure how to trade that market. So we're going to talk about how to deal with that as well. We're also going to talk about how to change your bias, right? Don't marry your bias. A lot of people go into the day with a specific bias, and sometimes the market actually suggests it should go higher. But what happens if it suggests it should go higher, but it doesn't go higher? Do you just do nothing all day, or do you actually get an opportunity to make money that day? So that's a big topic we're going to talk about today, guys. It's a very important topic because there are plenty of stocks that will gap up or gap down that ultimately don't do what you want them to do. But that doesn't mean you have to just throw them out. You can still trade them and make money, but you have to be flexible with your bias. So today's topic is a little bit how to be flexible with your trading bias and when and where you can do that. All right, if you like these videos, guys, help me out a little bit. Click that like button, crush that subscribe button. I'm Jared Wesley of Live Traders. Let's get to it. This week's lecture topic is having a flexible bias. You're like, well, what does that mean? Well, one of the things that I think really hurts traders is marrying their bias. They come into the day and they're like, oh my gosh, the market's supposed to go higher today. And then what happens if and when the market doesn't go higher that day? Are you just completely stuck now because you came in today and you were certain the market was going to do one thing, and then the market didn't do that thing? And now you've built your gap list or your watch list or your daily watch list around that bias. And not just with the market, but with the specific stocks that you're trading or going to or trying to trade. And we see this happen frequently. And I get questions from people all the time like, well, why would you go long on that, Jared? It was a gap down. Or why didn't you stick with that long idea? Well, because things changed, right? A bias is it's a fluid thing for those of you out there. It identifies as a fluid thing. But the point simply is today we're going to talk about how you can meld or change your bias and still be profitable. Now, don't get me wrong, I'm not saying you have to trade those days. If you really feel uncomfortable with this comment or this topic, you can sit on your hands for the day and not do anything. But this is going to help you take your trading to that next level, right? The next level being, I can trade all market environments. I don't have to be right all the time about my market bias. And this is what's really important about this lecture. It's a lecture about not always having to be right, but still being able to make money. Okay? So, before we get into that, we first have to talk about when will the insanity stop? When will the insanity stop? Well, never, because people are the same. And you know what? I hate saying it. I said it maybe a month or two ago. We don't want the insanity to stop. As bad as some of these things are, we don't want them to stop. Why? Because if they stop, that means human beings will actually get their shit together and learn. We want people to do crazy, silly things because, well, we want to be on the other side of those trades, right? This is the whole reason the market goes up. I mean, what was that stock, guys? HKD, was it? I can't remember. This stock went from like $7 to like $2,500 in 3 days. The market cap at one point, guys, was $400 billion. It put it in the top 10 largest companies on the planet, and it was $7 4 days ago. What? It's still in the top 20 largest companies in the world, and this company doesn't really have any earnings to suggest. It's kind of like a GME, AMD thing, but way worse in terms of market cap. Way worse. My point, what's the point I'm getting at? People are insane. People do crazy things. Why? Everybody wants to get rich quick. It's not how it's done. If you won the $1.3 billion Powerball, congratulations to you. That one person out there, congrats. The rest of us have to work for it. The rest of us have to work for it, and it doesn't happen overnight. So when you see these "When Will the Insanity Stop" segments, you don't want to be featured on one. I promise you, you don't, because they're ugly. 30 years old, life savings gone. Since April of 2020, I've finally amassed a 6-figure loss. Looks like I'll be eating ramen until retirement. At 30 years old, now granted, you still have time, right, to get that money back. But at 30 years old, if you're losing hundreds of thousands of dollars, something's wrong. How in the world can you lose hundreds of thousands of dollars when the market since April 2020 is up like, I don't know, 300%? I have to go back and look, but it's up a lot. How did you lose money when the market went straight up? Not being smart, obviously. Not using good money management or risk management. This is why people think trading is gambling. Plain and simple. People think this business is gambling because most traders gamble. It's amazing to me, okay, that in the last 5 years, this business has actually been elevated, right? And you're like, what do you mean? Meaning, for when I first started, and you tell somebody, yeah, I'm going to be a day trader, they would look at you cross-eyed, deer in the headlights, like they just saw a bright light. Oh my gosh, good luck with that. And then the next week or two, they'll come back to you, is everything okay? And you sit there, well, I don't understand. Why are you so concerned? Because their idea back then was that trading was gambling. Well, that mantra hasn't changed a whole lot. The only difference is trading has become far more accepted. And this is the irony. As trading has become far more accepted, people have gotten stupider, right? GME, AMC, Best Buy, all right? Now this HKD or whatever it was. People have gotten stupider. So it's actually more like gambling than it's ever been, ever in the history of the business, but now it's more accepted. It goes to show you how backwards people's thought process is. My point is, you don't ever want to be featured on this segment of When Will the Insanity Stop? Not ever. You don't want to lose your life savings at 30 years old. That's craziness, okay? So don't be a gambler. Be a professional. Be a trader. Be a professional trader, a professional investor, okay? Have stop losses. Use proper entries, use proper risk management, have targets, okay? It's a systematic way to make money in the markets. That's what technical analysis trading is. Don't be like this. All right, now let's dig into today's topic. The market isn't always obvious. Some market gaps are easy, right? Obvious and clear bias, okay? Go with the flow and trade with the market, find relative strength, right? That's easy, right? Some days the market just gaps up, gaps down, and you're like, duh, that's obvious what the market's going to do. And the market does that, right? Those are the really nice days where it's like, wow, that's a really nice gap. It's over a red bar, it's over a pivot, and then the market gaps up and it has room to go higher, and it goes higher. What a beautiful thing, okay? Then there are some days where the market gaps are very challenging. There's just no clear direction. Right, the market has an inside trading day, or maybe it's right gapping to resistance or gapping to support, and you're just not sure about the direction. And those are the days where you're going to sit on your hands or only trade extreme relative strength or relative weakness, right? And every day there's one or two stocks that show extreme strength or weakness. The issue with that is they don't always give us a proper entry, right? They don't always give us the entry that we really, really want. Okay, and then there are some market gaps are easy, but the market doesn't cooperate. These can be very tough days. See, when the market cooperates, you get into a long trade because the market bias is long, and boom, you make money. When the market's challenging, you're already going into the day with a defensive position. You're already going, whoa, this is a tough day. I need to sit back and be careful. So you're mentally prepared to be careful. But there are some days where the market gaps up, and you're like, whoa, it's gapping over a wide range red bar. It's gapping into void. It's got good volume. The pre-market chart looks great. It's got room to move higher. Like, oh my gosh. And then the market does nothing that it's supposed to do after that. Peekaboos higher and then just tanks. Whether it's a news report, it doesn't matter. Something happens in the market and it throws your bias out the window. These are the days that traders get killed. Right? These are the days that traders get crushed, especially newer traders who lack discipline. You can either sit on your hands on these days. You could trade extreme strength or weakness, which you could do on any day, really, or be flexible and change with the market. This is what we're going to talk about today. Be flexible and change with the market. But the question is, how do you do that? So understanding the market direction is very important. You guys have heard it before, right? Go with the flow, trade with the trend is your friend. You've heard them all. Well, what happens when the trend isn't your friend and they stab you in the back? How do you sort that market out without losing 3, 4, 5 to 1 that day? Okay? Exactly, Caesar. Ooh, good call. So let's take a look at it. All right? So this is a day where the Q's gapped down 1.4%. Well, for me, this was a little bit of an obvious one. The Q's gapped down 1.4%. Note, look what the Q's did. They went straight up. Right here on the right-hand side, the 15-minute, they went straight up. Okay? To some new traders, they might go, oh, well, this is a short bias day. Yeah, but look where we gapped to. We gapped to 15-minute support at 276. We gapped to 15-minute double bottom support at 277. And where does the market open? It opens right around 277. Okay? So when you look at this, you're gapping into a double bottom support area. And one of these was a pretty massive bottoming tail. This one ripped. So if we're using technical analysis properly, the definition of technical analysis is using past price action to help predict future price movement. Well, past price action at this level suggests a bounce, suggests a bounce, suggests a bounce. Okay? So when you look at this, even though we're in a downtrend, we're still below the trend line and in a downtrend. But for today, this is either going to be a bullish day or a choppy day. That's how you have to go into this. It's a bullish day or a choppy day. It's certainly possible the market could break 276. So this is one of those days where you better be prepared for everything. You better be prepared just in case it breaks lower. And you also should be prepared if it bounces, because that's the likely scenario. And you should also be prepared if it just chops around. Okay? So this one, to some people, is bearish, but I'm looking at it as an extended gap. 1.4% is a large gap down into double bottom support. Okay, we got that one figured out, and the market did what we wanted it to do. No harm, no foul. Why? Because we were right, and the market did what we wanted. Okay, now, what about a day like this? Now, it's the next day, right? The market gapped down into that 277. This is the next day following that. Okay, so we'll go back for a second. That's this day, okay, right here. We just talked about it right there. We just talked about it. Now, the very next day, well, 1, 2, 3, 4, 5, 6, 7 60-minute bars in a row up. The Q's gap up. And you're thinking, well, the novice trader says, look at all the void. Look at all the void. All this room to go higher. Well, it does have void. But how did it get there? It got there after running a marathon, right? You just ran wind sprints for a day. You just did a bunch of wind sprints, and then your coach is like, all right, guys, I'll give you a 30-second break, and then you get to go higher. Not an overnight rest. A 30-second break goes higher, okay? So this is an ending type of a move, but it's not ending the entire move. It's just a short-term end to this move up. Short-term, because we are in void and we should go back to 295. So what happened? The market chopped around. This is the easy day. Why is this easy? Because this is the day you go into and you're like, yeah, this is sit on. Let's go back. This is the second example, right? The first slide I showed you was the first one. It's a clear and easy kind of obvious gap, gapped into support on an extended move. It should bounce. Good. We're going to go long. Second one is this. Some market gaps are challenging, kind of no clear direction. Well, this one is a sit on hands, choppy day. It's a clear direction, meaning we expect an inside day, but inside days are hard to trade, so we're going to likely sit on our hands or only trade extreme strength. So we got the first two checked out here, right? The first one we just saw, and now the second one. This is going to be one of those sloppy, overlappy days. This is a day where you don't take 10 trades. This is a day you take 1 or maybe 2 trades or none at all. Okay, 1 or 2 or none at all. Okay, but what happens with this? Right here, pretty obvious, right? We're in a downtrend. We're still kind of below the trend line. We're 5 green days up, 50 period moving average, resistance to the left, general downtrend. It's an obvious bearish day. And it was a bearish day. Good for us. So far, we're doing well. These aren't the days I'm talking about, okay? It's the days when it doesn't do this, okay? This is an obvious day. You're up 5 days. You're at the 50 MA. Resistance to the left. Double top right to the left right there. Below the 50 MA. General downtrend. And the market was red that day. Great. What do you do on days like that? When the market's obviously red, you take obvious trades. Meta on that day was an obvious trade. Meta gapped down. I could have probably blown this up a little bit more, right? It gapped down, put in a red day, just like the Qs and the SPY. It gave this beautiful bearish pre-market consolidation. We shorted it shortly into the day, okay, and made $2,843 on it. It was obvious. The market was going to pull back. Note, the favorites, Meta under 166. Most of the stocks were what? Short ideas. Meta short idea, Win short idea, MU short idea, BEKE short idea. Why? The market bias that day was short. This is easy money trading here. But not every day is like this. Don't worry, we'll get to it. This is the way you want every day to be. Market gaps down and does what you want it to do. What about this? 4 green days up. Resistance to the left, right? We're 1, 2, 3, 4 green days up, and then you get this. So you have a topping tail yesterday, and now today you get this. Whoa, bearish bias, right? It's a bearish bias. It should be, because you're sitting at resistance. The previous day was a topping tail, and while I understand we put in a higher high, right? We broke the prior pivot high. I get that. But we are extended into resistance equals a pullback. And it was a small gap down. Extended into prior pivot resistance equals a pullback, and it was a small gap down. This is a clear and obvious bearish bias. Easy bias, right? I think so. It was. I called the market bearish yesterday. But what happened? It wasn't so bearish, was it? The market moved higher. It gapped down, as we can see. It moved up for about 10 minutes, chopped around sideways, retested the low, put in a lower low, and then from about, I don't know, what is that, 10 a.m., it just decided it wanted to go higher till about 1 o'clock, 12:45, 1 o'clock. Well, what do you do on a day like this when your bias isn't met? Your bias was short. And the market gapped down and moved higher, retested the low, and just took off. And you could see there was a big tug of war here. Overlap, 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 overlap. Big tug of war here. It's not so obvious anymore, is it? So do you just marry your bias and keep shorting stuff as the market goes higher and higher and higher and higher and higher? You just keep shorting shit. Just keep shorting it because, hey, my bias is short today. No, that's a death sentence. That's a sure way to the poorhouse in the trading world. And especially when you get to around 11:30, and you have what? A retest of the prior high. You pull back, bottoming tail, retest, bottoming tail, rip. Well, on some days, something so obvious is not so obvious. We're gonna come back to this, just so you know. Don't worry, I'm gonna revisit this slide in just a second. Okay? So now, right now, you're looking at net, and you're going, great. Straight move up, pulls back. I mean, look at all the good stuff we have. We're in an uptrend. We have a 50% retracement. Minor price support. Near a moving average, which isn't on here. Good risk to reward. Angle of retracement is good. Overlap is good. Whew. Entry, stop loss. But then I come out and make this comment. Net is a nice 5-minute buy setup over 116.65. But the market is tough here. And you're going to need the market for this to go higher. So now we're coming back to the market. Well, what does that mean? Because that 5-minute bicep looked really good. And there it fails. Well, you're moving higher here and you're pulling back. The problem is the gap was really big. This is a 1.5% gap, and then it moved higher. I want you to think about that. So the market in this case gaps up 1%, 1.5%, and then it rips up. So the market's up like 1.6, 1.7%, something like that. Note, the first pullback fails. Why? It's too shallow. Market's up too much. It needs a longer period of rest. Guys, the more a stock goes up, the more it needs to pull back in order for you to get back in it. See, one of the things that's a pet peeve of mine is when I see a stock that's crazy strong and it's up like 6 bars in a row and it does a crazy super shallow retracement, like 10, 20% retracement. And people are like, Jared, can we take that on a 1-minute buy side? I'm like, no, you can't. It may end up going higher, but the odds are against it because it's already so extended. So the first buy setup fails. The second buy setup puts in a bottoming tail. It fails. This is not a good environment to take this because the market's up so much. If the market wasn't up 1.5%, I would say take that buy setup because the market's probably going to be okay. But the market's up $6 or $7 here. This is a tough one. Okay? So when you go back to the previous slide, you go, yeah, that looks like a great buy setup. But you didn't take the market into consideration. And the market was looking tired even though it was pulling back. And guess what? Net was highly correlated to the market on that day. That's a tough trade, right? That's a tough trade. The correlation factor was very high. And note, it stops out, bounces a little wide. The market was going to do this. It's because it's tired. All right? So now, let's move on. Snow, same day. Same thing. Exact same thing. It's the same day. Okay? Went straight up with the market. Market went straight up. This pulls back. This has a beautiful buy setup, and you're like, great, uptrend, 50% penetration, bottoming tail, narrow body bar, good risk reward, angle over, oh my gosh. And the market went lower. And what did it do? It took net with it. There, I'm moving it off so you can see it. It took net with it. Okay? In this particular case, you need to have a better market bias. Okay? So now, what are the things we're looking for? Don't worry, we have way more slides to go. You still have to consider, how did the stock get there? How did the market get there? Was it sloppy or overlapping on that pullback? What are the market conditions? Relative strength, relative weakness? Is the market, does it have void above? What is the market doing? Is there a news report coming out? When you're looking at the stock, has the average trading range been met or exceeded? What's the level and depth of retracement? So how it got there and where it is, right? So how did it get there? Was it a deep retracement? Was it one wide range bar? Was it 3 or 4 nice controlled bars? What's the level of retracement? 50%, 80%, 100%? What was the gap like? For example, a great example of this today is PayPal. PayPal was like a 12% gap today. And I said to you guys pre-market, I said it's on a long list, but I'm not sure about this one because I think it could pull back today because it's tired and extended. Well, sure enough, the market's ripping today. Ripping. And what's PayPal doing? Going sideways and pulling back. Sideways and pulling back. It's excessive. It's tired. Okay? What stage is the stock in? Micro trend and macro trend. These are considerations that you have to think about on the market and every trade you take. So let's take a look. Coin. This is from yesterday, not even today. Okay? This is coin yesterday. Okay? Right here, coin gaps down. Gaps down. All right? There's the pivot to the left. It's a 5-minute pivot right there at like 60.75. Okay? And you look over here, there's the daily chart. And you need to get over 64.50 for this daily breakout. Now, the other thing I want you to take note of is, what if we really break down this chart? Okay? You're going to have a trend line over here, right? And you're going to break above that. I want to see something real quick. Yep, okay, I'll get to that. All right? So, the point is over 64.50, you're above everything you need to be above. You're above the daily consolidation. You fought the fight. Sellers tried to come in. Buyers stepped up. Overlapping bars, and you get in right here at 64.50, and you have 2 choices for your stop loss. Okay? You have $62, the wide stop, and you have 63 or maybe 62.90 as the tight stop. What does it do? It rips up, pulls back to support. The safest place on the chart to buy something is the first pullback after a breakout. Safest spot on the chart. You had another opportunity at 65 to add or just get in if you didn't already get in. 65, stop 64.50 and rip. And now what's it doing today? Continuation move. The thing went to like $76 today. We traded it today. This was a good swing trade. Let's take a deeper look into coin. Okay? Same stock. We're just going to take a little deeper look into it. All right? So, here's the same daily chart you just saw. I just blew it up a little bit more. This is the trend line, right? Breaks above it over here, pulls back. What's it do? Let's take this here to give you guys a better example of this. Let's move this over to here. What do we have here? A lot of support, right? Right there. This is where it stopped. This is a climactic move. It went from 140 to 40. That's climactic. 140 to 40 in what? 2, 4, 6, 7 days? Bounces back up, touches the trend line, consolidates, retests the lows, breaks above the trend line, retests the lows, breaks above, consolidates out, and finally breaks the moving average, pulls back and consolidates. Okay? Breaks out. Guys, I put this on social media yesterday. There it is. Coin. This is on StockTwits. Over 64.50 for a swing idea back to 80-ish. Guys, it's at $78 right now. That was yesterday. All right, it's 24 hours ago. There is your 30-minute 3-bar play swing entry. See the consolidation right here? 2.5-day consolidation. Wide range igniting bar, narrow range resting bar. It had to deal a little bit with the gap fill right here. Right there, you can see it dealt with the gap fill. Today, it's up to almost $80, 78 bucks. That's a $14 move on a $2.50 stop loss in 24 hours. But it's not just about coin. It's not just about coin. What did the markets do yesterday? We had a bearish bias, but the markets weren't bearish. I'm not going to sit there and just be bearish all day. Coin was a great long idea that started with a gap down. But once it got to the proper area and got through, broke through this resistance to the left, it was worth going long on. Markets kind of double bottomed, went higher. Yes, there's resistance, but here's your pullback. The first one, a little tough, but then the retest right there, this is a money trade. Once you saw the bottoming tail retest right here, right there, look to get in this at 315. Put your stop loss at 314.25, 314-ish, and rip. Guys, it went $3.50 on about 75 or 80 cent stop loss. It went 4R. So this is resistance. Resistance, but this is bullish or bearish. It ends up being bullish because it broke this topping tail and the penetration level was 100%. So it double bottomed down here, broke above this topping tail, broke above this topping tail, broke above this. You're not bearish anymore. You cannot hold on to that bias. This is what I mean by be flexible with your bias. Date it, don't marry it. Double bottom, breaks the topping tail, higher high. Breaks the topping tail, higher high. Breaks the topping tail, higher high. The level and depth of penetration on volume, by the way, see the volume down here? On volume, tells me there's a very, very good chance the markets are going to pull back to some level of support and bounce again because the level and depth of penetration off the low is so violently strong. The first trade was a little bit aggressive, but the retest is pure money. What's the job? Find a long idea. Let's go back. Oh my goodness gracious. Is that not at 11:30? Take a look at the timestamp at the bottom of the page here. This entry at $65 is right around 11:30-ish, give or take, 11:30-ish, correct? Just look at the timestamp. Okay, wait for it. Now I want you to go to the Qs, and I want you to look. Right around what? 11:30, what did the Qs do? Retested and ripped. How perfect is that market timing? because we changed our bias. Because the market was no longer weak, the market is now strong. You can't hold on to that. It's like it's like meeting a person and go, wow, they seem like a really nice person. And then you get to know them and they're not nice at all. What, you're going to keep believing they're nice? Or are you going to start changing your opinion of that person and go, yeah, they're not as nice as I thought they were. That's the line. They're not as nice as I thought they were. Well, the market was not as weak as we thought it was. In fact, it was downright strong. So the bias going into the day was actually the right bias to have. But we had to change because we now have new information. And the new information told us, change your opinion. I am not what you thought I was. Right? How do we take advantage of that? We take a stock like coin and we get in it. And in this case, it was a great swing entry as well. It wasn't just a day trade. It had 2 entries on the day trade, which was also a 30-minute 3-bar play over here, right? Based off the daily chart. And now you're sitting pretty on this bad boy because it's up to 79 bucks. And you were in at 64.50 with a $2.50 stop loss. You are up almost 6-1 in 24 hours. You swing traders out there, okay? Now, let's do it again. 1 isn't enough. Baidu is gapping down. And right down here, it broke support. Expect lower prices. Baidu is gapping down, and it needs to break 130-ish. That's where this big red bar stopped, okay? And it ripped higher. Big red bar stops going lower, and it rips up. Well, today, you are gapping deeply into a green bar. Right? You're gapping into the green bar. The green bar the previous day closed near the high. Today you're opening around here. And then what do? You're going to look to short Baidu when it gets around 130. Well, look at Baidu did. Baidu didn't just break 130. It went down to like 128.50. That's a good break. That's $1.50 lower, right? So you, at that moment in time, you should be expecting lower prices. But we have to change our opinion. Look what Baidu did. It went down to 128.50 and ripped straight back up. It ripped. It didn't just pop back up. It didn't lollygag around. It ripped straight back up. What? $3.50? This isn't some little passing thing, guys. It ripped $3.50. Okay? Then pulls back. Retest the lows, bounces, retest the lows, and you're thinking, oh, this might be a good short idea, right? So you're thinking, excuse me, sorry guys, excuse me, you're thinking this might be a good short idea. Why? You have lower high, lower high, lower high, and equal lows. You're getting a descending triangle. But what wasn't happening during this time? The market was going vehemently against you, right? So some people might go, well, maybe relative weakness, right? But the way this was starting to act over here, putting in a slightly higher high, then a higher low, is concerning. So over here, up until about 10:15, I'm thinking short on Baidu, right? I'm thinking short. But when it put in this higher high here, it took out this pivot high and it equaled this pivot high. Then it put in a higher low. All my opinions are changing now. Yes, it failed right here, but now I'm starting, it's not as weak as I thought. It peekaboos under, just like good computers do, peekaboos under and rips. So now what? On the way back up. So on the way down, it was rejected 3 or 4 times. Rejected, bounced, rejected, bounced, rejected, bounced, and finally rejected for the 4th time, right? Comes back up, takes out this pivot at 130, takes out the next pivot at 130.50, takes out the next pivot at 131, and finally takes out this pivot at 132. Oh my gosh. Baidu pulls back to now what is now support. Let's show it. Whoops. Hold on one second. Messed that up for a second. All right. So let's take this, and now let's look at Baidu. Draw that line right there. Okay? So now we have a stock that just broke 1, 2, 3, 4 pivots, kept going higher, significant new higher up to 133.50 and pulls back to support. Oh my gosh, when is it pulling back to support? Right as the market is too. Look at that, 11.15 to 11.30. Market's bouncing. We just looked at the cues. We just looked at them. They are bouncing right at the same time. Just like coin, Baidu's now long. It's no longer a short idea. And then later in the day, over here, it becomes a 15-minute buy setup because once again, it broke above this resistance point at 136 and pulls back to a level of support. This is a legitimate buy setup at 2 o'clock in the afternoon. For you afternoon traders, Unmal told you earlier today, raise your time frame. Don't trade on the 1 minute chart at 2 in the afternoon, 3 in the afternoon. Raise it up to 15-minute charts. Well, there it is. This is exactly what he's talking about. Bottoming tail at support on a stock that we've changed our bias on. It started the day weak, there's no question. It was the right bias, and then it changed. Got to be flexible. You have to change your bias. Okay? If you don't have to trade it. That's fine, but you're not going to go short on it, right? As long as you learn not to go short. And there's the market again. There's that 11 o'clock area right there, 11:30 area where the market bounced, and Baidu went with it. Coin went with it. Our market bias needed to change. Therefore, our approach to the market needed to change. So our bias went from bearish to bullish, and then it gave an actual buy setup, and all the stocks you're looking at go from bearish to bullish now. Not all of them, but many of them that you're looking at. Okay? Now, BAC. I don't know what it's doing today. I should have checked. It's another idea that somebody brought up yesterday. Downtrend line. Pivot, 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 pivot. We're just touching those pivots. And what's BAC done? It broke above the trend line, consolidated out now for 2, 4, 6, 8, 10 days. Now it's above the 50-period moving average. So trend line break above the 50 MA. It's got a higher low, resting period, and somewhat of a decreased volume. There is one day in here with that big volume, 2 days, but most of these 8 days, 10 days are light volume. There's 2 days that aren't. Over 34, trade it back to 38 bucks. You're probably getting a $1 stop loss here. So you have about a 4-to-1 risk to reward on this thing. Watch BAC over 34 as a swing trade mentioned in the chat room. This is how you do your trading longer term. So I'm putting this slide in here. It's a little off topic, but I'm putting it in there because people ask me about swing trading quite a bit. Swing trading is the same as intraday trading. You're just using higher time frames. Okay? But you want to have a checklist. Trend line break, above the moving average, higher low, resting period, decreased volume, specifically for a breakout. And there's your daily breakout. Okay? This is a slide you guys have seen before. Breaks the trend line, retests the low, goes higher, breaks the prior pivot, buy this pullback. Be flexible. The stock used to be weak, but it is no longer weak. You don't need to be the first person in. Same with Baidu. Right, guys, let's go back to Baidu for a quick second. Okay, let's go back to that. You don't need to be the first person in this thing, guys. You don't have to buy it. I mean, I wouldn't buy it here. Look how many bars up. 2, 4, 6, 8, 10, 12 bars. I know people that are like, Jared, what do you think of Baidu over 132, like right here at 1045? I'm like, whoa, slow down. Right? Slow down. This thing is extended. It needs a break. It went a little higher. Every once in a while, you get away with being this aggressive. It's not worth it. What's PTS say, guys? Up 3 bars, think sell. Up 4 bars, really think sell. Up 5 bars, really, really think sell. Just keep adding reallys to that. Each bar further, it goes up 6, 7, 8, 9 bars. Sometimes they'll surprise us, right? The market can stay solvent or irrational longer than you can stay solvent. This is why you need rules and good money and risk management. My point, though, is you didn't have to get in here. You didn't have to get in at the bottom and be a hero so you can tell all your pub friends, your bar friends, that, hey, I got the low of the day today on Baidu. So what? It was crazy aggressive and risky. Take the easy money. The easy money is right here. That's what I'm trying to teach you guys by being flexible. Take the easy money, right? Here's another transition. You guys have seen this slide before. Breaks the trend line. Now you have 3 tests, but they're slightly higher lows, right? Higher low here, lower high here, consolidation here. The safe entry is waiting for the pullback. Exactly. 2 are either way, exactly. So you could get in at 80, a little bit aggressive because of this over here at 80.25. Right? This is an intraday chart. Okay, guys, intraday chart. This isn't a swing chart, intraday chart. So this is a stock that was showing strength earlier, showing weakness, but then it had this waterfall. Look at the ending bar, 1, 2, 3, 4 bars, wide range ending bar, ending volume, bottoming tail. It's going to bounce. Pulls back, finally breaks the trend line, finally breaks the moving average. This is actually something you could probably buy at $79.25, but it's aggressive. You could certainly add at $80, but the safest place is over here at $80.25 right there. Goes up $1.25, guys, on like a 30-cent stop loss. It's 5 to 1, 4 to 1, 4 to 1. Intraday. Earlier you had a bullish bias, then it was a bearish bias, and it was back to a bullish bias. Be flexible, right? Be flexible. Remember, how did it get there? Was it sloppy or overlapping? What are the market conditions? Has the average trading range, ATR, average trading range, been met or exceeded? They're much less likely to go higher if their ATR has been exceeded. What's the level and depth of penetration? Is it 100% retracement, 50%? Is it a double bottom, triple bottom? What happened during the double bottom? Is there a bottoming tail? Is there an ending bar? Is there a volume spike? Is there a narrow body bar? This is where PTS comes in handy. It's why you all need to take professional trading strategies. All this is in there in great detail, all 650 pages of it. Okay, 20 hours. What was the gap like? Excessive? Was it gapping into resistance, into support? What was the general stage of the stock? And is it transitioning? Is it changing? Is it breaking trend lines? What's it doing? So, in conclusion, the market isn't always obvious. Some days it's obvious and clear. And those are easy money days. You come in, you go click, click, 2R, 4R, 6R. Done. Thank you, market. I'm going to go play golf. Other days you wake up, you look at the market and you're like, this is going to be a shit show today. You just know there's some days you wake up and you're like, man, this is not a good gap in the market. We're going to have overlapping, toad in a blender, Christmas tree, red bar, green bar slop. Okay, that's fine. Because I can just sit on my hands and rest. I just sit back like, I'm disinterested today. And that's okay. The market's telling me to not be so interested. But these days are the ones where new traders and even some experienced traders get chopped up. The days where the bias is obvious, but the market doesn't cooperate. Don't lose 4R on these days. Tell me I'm wrong. You go back and look at your 20-day trading month, and there's 2 or 3 days that ruined your month. You're going to make 20R. Those 2 or 3 days took back 10 or 12R, and you end up making 8R instead of 20. You were going to make 10R, but those 2 or 3 days took back 7R. You end up making 3R. Because of days like this. They suck you in, obvious bias, and you go in that direction only, and you get chopped around. You need to be flexible with it. It's okay to take a stop on a trade, guys. That's totally fine. Look, we all have a bias, and we take a trade, and sometimes out of nowhere, a tornado comes through, and the market's like, oop, sorry. Maybe it's a news report, whatever. But how do you handle the rest of the day? That's the important part. How do you handle the rest of the day? Okay? Understanding the market direction is important. And one last quick one, because somebody sent me a message about it. Hey, Jared, can you explain your XPEV trade? And I was like, you know what? I'll just put it on a slide. I had a few minutes between mic times. XPEV is textbook. Gap down. The support area on the daily is right here. So you're gapping under a topping tail, but a green bar. We needed to get under 22.08. That was the line in the sand. We snuck in 2 pennies early. Room to go lower. Textbook 5-minute 3-bar play. Wide range bar, narrow range bar, drop. And this is important. The reason it's important, guys, is I get emails, social media comments from people. It's nice, Jared, that you can put that on a slide after the fact. Well, no. The people that were in the room today, you saw it happen. You had 4 or 5 minutes to get into this trade when I called it. Okay? Take a look. There it is, 9:34 in the morning. It did not trigger fully until 9:40. 9:41, 9:40. You had 6 minutes. I called it 6 minutes before it happened, which at that time of the day is an eternity. It's a country mile. You had plenty of time. Textbook. Why am I showing you this? because I use the concepts that are in professional trading strategies. It's not like I wrote a book and it's like, yeah, he does something totally different. I use the same concepts that are in the book, that are in the course. Does that make sense? So it's like, yeah, they work. $2,950. Pretty smooth move. Pretty smooth. And this went 3-1, by the way. We looked for 2-1 out of it. It went 3-1. Right? We're looking for 60 cents on this, and it went, what, $1? Something like that. Okay? So I just wanted to go over this because I got a couple questions about it, and people are like, hey, what was the idea on XPEV, etc.? The move below support. 5-minute textbook 3-bar play, a 2-minute, 1-minute breakdown. Okay? And then almost $3,000. Not bad, right? So with that, guys, I hope you guys learned a little bit about how to be more flexible when the market doesn't cooperate. Easy money, we wish every day was like that, where the market gives an easy, obvious bias and everything goes in that one direction. But that's not the reality of the stock market, okay? So there are days you're going to need to be a little bit more flexible, and you may start the day with one bias and end the day with a different bias. Just make sure you change your approach when your bias changes too. Don't marry it. Be flexible with it. Okay? So I'm Jared Wesley of Live Traders. I hope you guys learned a little bit. We'll get back at it again next week.